Hi guys, good morning and welcome to this Money Control live stream. A brand new week and a festive one at that, a truncated one as well. But first of all, let me take this opportunity to wish all our viewers a very happy Diwali, a very prosperous Samvat 2082, a very happy New Year as well, in the sense that you may have good health, wealth, peace in the coming year, and lots of profitable holdings as well in your portfolio. But of course, we'll help you navigate the next leg of the rally that is expected, given the fact that over the last 2 weeks we've seen the market really get into festive mode, because in the last 2 weeks we've seen the Nifty rallying in excess of 1000 points, in fact 1200 point up move on the Nifty in the last 2 weeks. In fact, we had the Nifty Bank as well hitting a fresh high on Friday. And the Nifty Midcap index is also up 5.5% in the last 2 weeks. The Nifty Bank index rallied 7% in the last 2 weeks. That was one end that wasn't really firing up, but that is also participating now. And as I mentioned, the Nifty Bank index hit a fresh record as well. So yes, the bulls got into the party mode at the right time. Although Samvat 2081 in terms of returns hasn't been all that great. But portfolios did see good returns, given the fact that some of the stocks did see gains of 20-25% in the last year as well. So it was a stock specific story, not great gains on the index front, but mid caps, a lot of mid caps and small caps did log in good rally in the last Samvat. Lots to watch out for today. Lots of result reactions. Weekend was very hectic in terms of earnings. You had some big banks reporting numbers. We'll take stock of that. Reliance Industries came out with numbers post market hours. We'll take stock of that as well. And of course, all your stock related queries, we'll get them addressed, and a lot of Samvat picks as well coming your way. So you can't afford to miss the next 1 hour on Money Control. But of course, we'll touch base with our experts and get you stock picks as well. Before that, let's take a look at the top stories at this hour. Asian markets start the week on a positive note as investors await a slew of economic data from China. China, meanwhile, has held on to its benchmark lending rate as well. US futures were holding steady after a positive close on Friday. The GIFT Nifty hinting at a positive gap up open for our markets. Crude prices hold steady as investors await a key meeting between US President Donald Trump and Russian President Putin. Meanwhile, gold prices pull back after record highs on the back of a firmer dollar. In one of the largest ever FDI in Indian financial services sector, UAE-based Emirates NBD Bank is set to acquire a controlling stake of 60% in RBL Bank through a primary capital infusion of 26,850 crore rupees. NBD will also make a mandatory open offer to acquire up to a further 26% stake. The bank also reported a mixed set of Q2 earnings. And Reliance Industries delivers a robust second quarter performance aided by strong growth in its consumer business. Consolidated revenue rises 10% and net profit jumps over 14% from a year ago. A heavy weekend of bank earnings. HDFC Bank reports inline set of numbers led by trading gains. ICICI Bank and Federal Bank also report a good quarter, while IndusInd Bank reports weak numbers. All right, then quickly take you through what really transpired last week. We saw the market rising for a third straight week. The Nifty Sensex logged in gains of 2% each. Markets, recorded their biggest weekly gain in 4 months. The Nifty Bank as well was moving in line with the benchmarks, although the Nifty Midcap index underperformed on Friday and also for the last week. Real estate and FMCG were the big performers last week. They gained somewhere around 3% apiece. But on Friday, we had the Sensex and Nifty hitting a fresh 1-year high. So 52-week highs for Sensex Nifty. Nifty Bank index hit a record high. Sensex crossed that 84,000 mark intraday, and the Nifty crossed that 25,750 mark as well on an intraday basis. Lots of movers, but let's talk about the options cues. The Nifty put call ratio dropped to 1.21 vis-a-vis 1.38 in the previous session. Talking about the stocks in the F&O ban, the newsmaker RBL Bank has entered the F&O ban list, and Sammaan Capital remains in F&O ban. But in terms of foreign inflows or foreign fund flows. There has been an inflow to the tune of 300 crore rupees, and of late we are seeing buying emerge from the FII community, although no big numbers, but still the sell-off seems to have abated, and they have been covering their short positions, and of course they've also been buying in the cash market. So that's some bit of good news from a market standpoint. The domestic institutional investors continue to buy, and they bought shares worth 1,500 crore rupees in the cash market on Friday. On that note, let me bring on board our expert for today to take stock of how we are looking as we head into the Muhurat session tomorrow. Ruchit Jain, Vice President Technical Research of Motilal Oswal, joining in this morning. Ruchit, lovely chatting with you. First of all, a very, very happy Diwali, and I not just wish you lots of wealth, health and prosperity, but I also wish you a lot of peace of mind.
Thank you very much, Nandita, and let me also wish you, your entire team, and all the viewers a very happy Diwali. And I hope that we are starting the new Samvat, ending the previous one on a very high note. Although last 1 year was a phase of consolidation, but we hope that the next this Samvat would be great for the investors. And the way we have seen a good rally this year in many commodities in the precious metals like gold, silver. And I really hope that the next Samvat, there will be such sparkling rally in the equities now.
Yeah, we really hope so. Given the fact that for equities per se as an asset class hasn't been such a great year. But in hindsight, if you look, there were quite a few individual movers, right? There's some stocks that did clock in somewhere around 20 to 30% kind of gains as well. Even if not on the headline level, broad end of the markets had quite a few stories over the last year. But Ruchit, before talking about individual stocks, I want to understand from you what are your recommendations for the day and heading into Muhurat session. Any Muhurat picks from your end?
Yeah, so Nandita, the way what we are talking about the markets that if you look at the entire uptrend which started from March 2023 to October 2024, that was 1.5 years of up move in the markets where we had not seen any kind of retracements, no consolidations. I think Nifty had rallied about 60-70% in that 1.5 years time frame. And our average market returns, if you look from a longer period of time, the index returns are somewhere in the range of 15 to 18%. So I think that exponential return had to be average somewhere. And it was good that in spite of such FIS selling, the last 1 year we had seen consolidation in the markets, time-wise corrections rather than price-wise correction. So the average returns, which were exponentially high for that 1.5 year, I think if you look that period, including the last 1 year now, we are back to the normal levels. So I think this helps us to form a good base now for the markets and start the next leg of up move. So I think that should be seen very soon from here on. Now, as far as picks are concerned, today's pick would be more from auto space. I think just from a day or next 1 week perspective, one has to focus. Then one can keep auto stocks in mind. Since the auto numbers are good, the overall trend remains quite bullish post the recent GST announcement. And I think that momentum could continue. So TVS Motors, short-term traders can look to buy at current levels with top loss below 3,550 for potential targets around 3,900 in the near term. And as far as Diwali picks are there, from next 5 to 6 months perspective, we are bullish on one is NBFC space, the banking and the NBFC space. Within the banking space, we like SBI, which is the PSU heavyweights, and we believe that the PSU's banking space would see a good momentum going ahead. So SBI can be bought at current levels from the banking and NBFC. From a bit medium term perspective, I would say keep at least a view of 4 to 6 months. Then no, defense is another space where we are of the opinion that the corrective phase is behind, and many of the defense name would again start showing a good run up move going ahead. HAL we like within the defense space where the mid to long term charts are quite positive. Apart from BEL, of course, which has been an outperformer. So HAL is one stock which traders or positional traders can look to buy from a bit medium term perspective. So SBI, HAL will be these two names where I would suggest going long more from a mid-term perspective. Maybe in the Muhurat trading one can look to buy these stocks, and if one is looking from a trading perspective, then auto I think is one space where TVS Motors and others can be bought from a momentum perspective.
All right, those were the recommendations coming in from Ruchit, both for intraday and for Muhurat trading as well. Hold that thought, Ruchit. We'll come back and talk stocks as well. But let's talk about the market open then. We have opened up, up 170 points or thereabouts. There's a fair bit of strength. Good start for the market, this Monday morning, and of course, this festive week. Let's see whether we can actually look at clocking in the 26,000 mark as well ahead of the Murat session. 25,900 is back on the screen as we speak. So almost a 200-point rally on the index. In terms of Sensex, cleared that 84,600 mark as well on the upside, 660-point rally, and the Midcap index also underperforming slightly, but still there's strength there as well. That index is up 0.5% or thereabouts. In terms of the Nifty Bank index, record highs continue, 58,190. That's where the Nifty Bank index is at, 1% gain on the Nifty Bank index. And the likes of Reliance Industries, after numbers, moving from strength to strength, up 3% almost as we speak. Numbers are fairly good. We'll take stock of that as well. But private banking names, NBFC names, and Reliance Industries, these are all the engines that are firing up this morning. Losers are few and far between, and they are largely from the metal and technology pack. But in terms of gainers, aside of Reliance Industries, we have Axis Bank, Kotak Bank, Bajaj Finance, Shriram Finance, all of these, up and about, up anywhere between 1.5% to 2.5% or so. Indigo is another one that's gaining traction, 1.5% gain there. HDFC Bank post numbers, that's also up 1.5%. You have some of the IT names that are staging a comeback, the likes of Infosys. I think HCL Tech is another one that was gaining in early trade. But in terms of the laggards, then ICICI Bank, that's down almost 2%. Numbers are fairly good, but we'll take stock of that. The stock is the top Nifty laggard. Ultratech Cement had a muted quarter, and it's reacting to that, 1% down on that one. Wipro and Tech Mahindra from the IT pack are not participating, and so is JSW Steel. Just want to see in terms of other sectors, what's really happening. As I said, the Nifty Bank index is taking the lead. In terms of autos, want to see what the auto pack is also doing. Last week we had FMCG and Realty. They were among the top gainers. Some issue with my charts. I think it's not opening, but we'll take stock of that. But let's talk about Reliance Industries. Numbers were fairly good, and understand what the next level to watch out for will be here. It's cleared the 1450 mark on the upside. Profit of course climbed 14% in the quarter gone by on strong growth in refining, retail, and digital. The O2C EBITDA grew over 20% to 15,000 crore rupees. Oil and gas segment, however, recorded an EBITDA of 5,000 crore. That was down 6% almost. In terms of Geo, the revenues were fairly strong, double-digit growth, up 15%, led by expansion in its subscriber base. In terms of Geo's average revenue per user, it improved over 8% to 211 rupees 0.4 paise. And the retail business also grew strongly by 18% on a year-on-year basis. Given the fact that Reliance Industries, the stock of RIL, has been showing strength, in the last week it gained some around 4%, and today, after good numbers, the stock is reacting up almost 3%, 1455. That's where it's at. Ruchit, what are the next levels to watch out for, and does it have the potential to clear the 1500 mark on the upside or not in the coming sessions?
Yes, I think the stock should do well from current levels. In fact, if you look at last 3 months, we have not seen any kind of trended move in Reliance. Rather, it was consolidating within the broad range of where 1430 was acting as a resistance, 1350 was acting as a support. Prices have given a breakout from that consolidation phase of last 3 months, and that too, if you look at the volumes, are also good. So I think the price-wise as well as time-wise correction seems to have been done with, and we should see a renewed up move at least in the near term towards its previous swing highs, which were around 1540 to 1550. So I think 1540, 1550 are much doable in very short term in Reliance Industries.
Okay, those are the levels to watch out for on Reliance Industries. But let's take stock of all the banking earnings that came in as well. HDFC Bank, as I said, is reacting positively. Net profit was up almost 11%. Managed to beat expectations. Loan growth improved, asset quality as well improved, and that of course aided the second quarter show. Net interest income that also grew, and GNPAs fell 1.24% or thereabouts. In terms of ICICI Bank, even here the net profit was a beat, up 5%, steady NII growth, asset quality improved further as well. But we are seeing divergent moves on both these stocks. Any of these stocks catch your attention? We'll talk about IndusInd Bank and RBL Bank next. But in terms of which one to go for between an HDFC Bank and ICICI post earnings, what are your thoughts?
So I would prefer HDFC Bank, although the trend for both the stocks are positive, but the kind of formations that we have seen over last 15-20 days, the stock has managed to form a good support base around the recent swing lows. In technical terms, it has formed a double bottom pattern, and has given a breakout from that. So which clearly indicates a good buying interest in the stock. So I think on the high side, 1060, 1050 can be expected in the short term in HDFC Bank.
Okay, that's the view. HDFC Bank, that's the preference. But what about PSU banking a lot? Because SBI that has been doing well. PNB reported numbers. Q2 net profit grew 14%. Asset quality was fairly okay. Asset quality improved, so to say. The entire PSU banking index was taking the lead earlier. Of course, now we've seen a resurgence in private sector banks as well. But within the PSU lot, which one do you prefer?
So we like both SBI as well as PNB. SBI, in fact, has taken the leadership recently when the entire PSU basket was doing well. And the kind of consolidation along with the broader market that we have seen in SBI over last 8 to 9 months, and then this breakout, which was about 830, 840, the follow-up move is also very strong. So I think here also, of course, being a heavyweight, we should expect more slow and gradual up move in the stock. But gradually, I think this leadership would continue in SBI, to lead the entire sector higher. And positional basis, we are expecting levels around 940, 950 if one can give next couple of months time frame. Even PNB, I think overall structure does not seem to be bad at current levels. The stock has managed to form a good support base around its 50-day exponential moving average in recent correction, and it has started that high top high bottom structure formation which is there. So here also, I think if one is looking from a positional perspective, then PNB is also another stock where no one can expect an uptrend going ahead.
Okay, right. You like both the stocks, and meanwhile, the Nifty PSU Bank Index is the top sectoral gainer today. All the sectors are trading in the green, so there is cheer across the market. But the PSU Bank Index is taking the lead. That index is up somewhere around 1% or thereabouts. In terms of RBL Bank, the stock has spent a lot of time in the F&O ban in the last couple of months. Today as well, it has entered the F&O ban. Numbers are fairly mixed. We saw the second quarter net profit falling 20% on a year-on-year basis, missing estimates. The interest income rose 4%. Asset quality although improved. Provisions increased on a quarter-on-quarter basis. But the other big news point is the fact that Emirates NBD will be buying a majority stake of 60% via primary infusion of $3 billion. And this, of course, will be the largest ever foreign direct investment and equity raise in the Indian banking sector. The proposed investment will be via preference issue. As I said, the bank is expecting the first tranche of money from Emirates NBD in 5 to 8 months. And of course, in terms of the preference share price, the bank will be issuing shares to Emirates NBD at a price of 280 rupees per share. That's of course at a fair bit of discount to the current market price of 309 or so. The stock is up 3.5%. How do you trade into this stock, and what are the next levels to watch out for?
One should keep a buy and dip strategy for this stock. Overall, we have seen a consistent up move in RBL Bank over last 2 or 3 months, and we can see that whatever small bit of corrections are coming, we are not witnessing any volume-based selling now happening in the stock. So this clearly indicates that whenever dips are there, there's a good buying interest in the stock. So 290, 280 now would become a good support base for the stock. And until this is intact, overall, if anyone is holding existing long positions, they should continue to ride this trend. And even if we get any kind of minor dips in between going ahead, that should be used as a buying opportunity in RBL Bank.
Okay, that's about RBL Bank. There's another company from the cement pack. I want to draw your attention to this one, Ultratech Cement. Profit saw a good growth of 75% on higher volumes, and margins also expanded on a year-on-year basis. The company has approved a capex of over 10,200 crore rupees, which of course it will be funding via internal accruals. It will be adding a capacity of 22.8 million ton per annum in phases starting FY28. The stock is down almost 1% or so. Within the cement basket, how would you approach an UltraTech cement, especially after the numbers?
It still seems to be in a consolidation phase. 11,800 to 12,600 is the range where we have seen this consolidation. And overall, although the longer term trend is not negative, but in the short term, I think the stock could remain sideways. So one can look at the stock only if one is looking from a long term perspective, but from a trading perspective, does not seem to be a stock where we would see any no great momentum on the positive side, neither on the negative side. So some time wise correction, I think, is still left in UltraTech Cement.
Okay, time-wise correction in UltraTech Cement. Any thoughts on Ola Electric? The stock is down 4%. It had seen a very, very good run, but today I think it's kind of hitting a speed bump. The stock did see a very sharp run-up recently, I think before it started correcting. Any thoughts, Ola Electric?
I think so in the August month we witnessed that sharp rally where I think from around 40 rupees the stock rallied straight towards 70 rupees with very high volumes. But then when no the stock was there in ASM stage, later on it went to T group only, and for circuit filter changed from 5% to 5% only. So I think that all led to a fall in the volumes. And if you look at the daily volumes now compared to what we saw in the August, the volumes have very less now. In compared to those volumes. So this clearly indicates that at least that speculation interest is won't be there. So within the auto names, we have also spoken at the start of the show that the larger names like TVS Motors is there, Hero MotoCo is there, or even the four-wheeler names like Maruti, M&M. I think there some consistency is there, and even in case the entire auto basket moves higher, the sector moves higher, then the leadership would be there from those names. So I would prefer stocks such as TVS Motors and Hero MotoCo if one is looking for fresh entry even at current levels.
Okay, TVS, Hero Moto, those are the preferences from the two-wheeler pack. But let's shift focus and address our viewer queries as well this morning. I want to start off with a query from, there's a query on IndusInd Bank, which I spotted from Debu K. After earnings, what are the charts looking like? The stock, of course, hasn't participated, even though the Nifty Bank index hit a fresh record high. The stock has been sideways. If you see the last month or so, the stock, of course, has been under pressure, especially after all that's been unfolding. In terms of the FNO issue there. But not participated. What is the kind of support that one should really look at? Of course, it's way above the 52-week low of 606, but still under pressure. So, on the downside, how much more do you expect here on?
So yes, Nandita, this entire underperformance is more because of that corporate governance issues, that were there in the news recently. And because of that, we have not seen any kind of fresh buying interest coming in the stock. But one thing, that one can see that after this entire price-wise correction, which halted near that 606 level, the stock has now gone into some consolidation, which more seems to be a time-wise corrective phase. So in the near term, 700, 690 would be the immediate support to watch out for, whereas 780 to 800 would be the resistance. And the kind of volumes that are not picking up as of now, some consolidation within this range can be expected going ahead.
All right, that's the call on an IndusInd Bank. But let's get some more viewer queries addressed then. Want to get in this query from Pannu Anil on BSC. He has 230 shares at the price of 2,200 rupees. Wants to know if it's the right time to exit or should he continue to hold on. BSC, of course, after a good run, there were issues with it in terms of the long-term derivative contracts as well. The stock did see a fair bit of correction. Of late, last 5 sessions or thereabouts hasn't been a good mover, so to say. But he's still making a profit here. How should he approach?
So 2000, 2050 is the range where the stock has managed to form a good support in the recent correction. And from that, we have seen a pullback move, at least a short-term pullback move over the last couple of weeks. So for now, I think you can hold in your existing long positions because on the higher side, overall, it does not seems to be no negative post. The recent correction has completed around the 2000 mark. And 2600 is the level that we are watching out for. If the stock manages to surpass the 2600 hurdle, then we can expect levels around 2800. So those would be good prices where you can think for profit booking or at least partial profit booking. So at current levels, now you can hold your existing positions.
Okay, hold your existing position. That's the call. A couple of more queries before we bring on board our next guest. Yagnesh Balakrishnan has written in after a long time, and he wants to know your thoughts on Gillette India for the long term. The stock has given good returns over the last 6 months, but last 3 months it has actually kind of given up most of it. It's down 16 odd percent since mid July. At 9,450 or so, how are you looking at the stock, and what should be the long term targets here?
So generally, there is not very high liquidity in terms of volumes in this stock, but overall trend is not negative even though prices have corrected from 9,000 to 9,500. In fact, it is now trading very close to its 200 DMA support, and it will be very crucial to see next couple of weeks whether it manages to hold on this 200 DMA support level. If it does not break that 9,000 mark, then one can expect a rebound again in the going ahead towards 10,500 to 10,600. So if any long positions are there, then these are not the levels to exit. Rather, one should keep this on watch list and hold the existing long positions.
Okay, that's the view on Gillette. Hope that answers your query. Last couple of queries then. I spotted a query on Bajaj Finance that, by the way, hit a fresh 52-week high this morning itself. I think this query is coming in from Prajit Prakash. I think he's bought it at 1071.5 and wants to know what should be done. Today, of course, the stock is at 1075 and it made a fresh 52-week high of 1086.5. Any thoughts?
Keep some more positional or medium term view for Bajaj Finance. So overall, if you look at the sectoral move also, then the entire HDFC as a sector is doing well in this up move over last 1 month. So banking NBFC is one space where we can clearly see when the markets are going up, there is some good relative outperformance. Within the NBFC space, if you look at the leadership, then Bajaj Finance is one which has been showing a good outperformance over last few weeks. So it's good to hold on such name where outperformance is there. Yes, being a large cap name, one should not expect very fast moves in a very shorter period of time, but rather if you give some more time, then you can expect some good returns from Bajaj Finance. On the higher side, I think 1300, if it comes, then those would be good levels to take a review whether to book profit over there. So hold on the existing long positions in Bajaj Finance.
Okay, that's the view on Bajaj Finance. Take a medium term view on the stock here on. But there's one query that's catching my attention because the stock has been in a steady downtrend, and that's Tejas Networks. This query has come in from Alex. Wants to know your thoughts, and he wants to know how bearish is it looking going forward, any multi-year support levels. Well, the stock, of course, it's almost at the 52-week low of 542. Right now it's at 544, but very close to that 52-week low. The stock has been a massive laggard. Last 6 months it has shed anywhere between 35 to 36%. How much more downside, given the fact that it is almost at the 52-week lows?
If any stock is showing that underperformance when the markets are rallying, it is not participating. In fact, still it is going down. And you should take the courage and look to shift the positions to some better stock where you can make good returns in the market up move. So overall, the trend definitely is still negative. If I look at a bit longer term charts, and major support for the stock would coming around 450, 460, where the monthly charts 200 EMA is placed. So as of now, the trend still remains positive. On long term chart perspective, 450, 460 is the major support zone.
All right, that's about Tejas Networks. I hope that answers your query. But with that, we've come to the end of the query segment. Ruchit would like to thank you for taking out time and joining in. Once again, wishing you a very, very happy Diwali. a very profitable Mahura trading session and Samvat 2082 as well. Wish you all the health, wealth, and prosperity and peace of mind. For you, for your entire team, and for your family as well. Thanks a lot for joining in and sharing your thoughts with us.
Thank you so much, Nandita.
Thank you. I'll take a look at the market then. We are showing strength, yes, but we've dipped below the 25,900 mark. No reason to complain. We've had a good 2 weeks for the market. It's been a good run. The Nifty, of course, gaining in excess of 1,1300 points in the last 2 weeks. The Nifty Bank hitting fresh record highs, and of course, Midcap also in fine fettle, although it has underperformed the benchmarks slightly, but still no reason to complain. And earnings, of course, have also not been looking all that bad. But on that note, let me bring on board our next guest for today. Joining me is Nikhil Khandelwal, MD of Systematix Group. Nikhil, lovely chatting with you. First of all, very, very happy Diwali. And wish you a very, very happy Samvat 2082. Health wise, wealth wise, hope you prosper in the new Samvat.
You all and all your viewers a prosperous year ahead. Thank you.
Thanks a lot. So let's begin this conversation. Nikhil, how have you been feeling about the recent leg of rally? As I was mentioning, the Nifty has rallied 1200 in excess of 1200 points, 5% or so in the last 2 weeks. The Nifty Bank Index, that leg of the market was not firing, but that has participated. We've had the Nifty Bank Index at highs. So although looking back, reflecting at Samvat 2081 wasn't really a very great or good year for equities in terms of the headline indices. There were individual stories, so to say, that saw good gains in the last 1 year. But striking the festive note at the right time, what is your sense? Do you think this will continue? Do you think it's just the start of a new leg of rally? What are your thoughts? How are you feeling about this leg of the move?
Right. No. So I think we have been quite distracted in the overall economy by the action which was happening globally. Primarily, as we have spoken in your channel as well, that the move by US on increasing the tariff was something which was bothering the market, especially the flows into the markets from the FIIs, which led to a significant amount of pessimism in the market. People were quite wary about how the export numbers and the manufacturing numbers from India will look like for the month of August and September. And I think as that data started to come in, people started to see that while there are challenges of export numbers going ahead, it wasn't that big of a hit to the Indian manufacturing ecosystem, Indian services ecosystem. What also happened at the right time was the government moved towards GST rationalization, and we are seeing the numbers come in right for the month of September. And now even for the month of October, the data from automotive companies, the data from e-commerce companies, the data from retailers, it's showing numbers in not just in double digits, but going as high as 50% growth over the last year, the same festive period. So in general, we were already in an environment of low interest rates, and now combined with GST rationalization, and is actually throwing strong data as far as Indian economy is concerned, especially from a consumer viewpoint. So I think a combination of all this is what is impacting the markets positively. We believe and have been telling that the markets should give double-digit returns this year, and we maintain that stand. This is a year of strong consolidation for markets. Despite a lot of global headwinds, I think India is constructively moving in the right direction, whether as a consumer economy or whether as a manufacturing economy. So that's broadly, is something how we are looking at, and gives us confidence that this rally and this uptick is there to stay.
All right, this rally is here to stay. But when you talk about 10 to 15 or double-digit kind of returns, do you guys have any Nifty target for the next year, say by next Diwali?
No, we've been talking of this financial year per se, that this year, year on year, we should be about 12 to 15% year on year growth on the index.
Sure.
And, I think till a month back, we were at about 6%. So I think the index should give another leg of 6 to 7% in our view from the levels till last month.
Okay.
So till Diwali, we believe the consolidation in the markets will continue. We have seen the worst of phase as far as demand destruction, supply chain disruption, etc. is concerned. I think the only way up for for the Indian economy is the only way I think is up for the Indian economy. Also, I think what we have been seeing that despite this year has also been quite disruptive in terms of the government capex. The government capex has been one of the weakest as far as the infrastructure is spend is concerned. So we believe that as things settle down, the government capex the momentum will also increase. So next Diwali, year on year, I think we are looking at quite a strong move in a broader economic parameters are concerned.
All right. Okay. You expect a strong up move here on till next Diwali. But tell me, should portfolios be more tilted towards mid caps, or should they be more tilted towards large caps? Because on the headline index front, as I was mentioning, we haven't seen great returns. Do you think it's time for large caps to play catch up, and on that thesis, one should keep their portfolios more tilted towards large cap names?
No, I think definitely large caps are the ones where there is a lot more value to be bought into, and definitely if you are playing Indian automotive, you should be investing in the larger automotive like the M&Ms and the Tatas and the Marutis. If you are buying into the banks, and we've been telling that not just the large private banks, we should be playing it through the large public sector banks like the SBIs, the BOBs and the PNBs and so on and so forth across sectors. I think the large caps have much more value going forward. So from a construct perspective, definitely going ahead from a year-on-year perspective, large cap should be at least 50% of the portfolio, as that will, and that is where the value lies, and that's where more returns are there to be made.
All right, got your point. Overarching themes, what do you like right now in terms of, which end of the spectrum will do well, manufacturing and defense, consumption, anything that you prefer?
I think consumption in general will remain a strong theme. We believe that consumption at the medium to bottom end of the pyramid will be a much more stronger theme going forward. So we must play the consumption theme through value retailing. We should play it through jewelers also who are actually having much more value retailing formats through companies which are in the dairy sector. So consumption as a theme, I think, should be played through some of these lower end of the pyramid kind of consumer names. The other part of the consumption theme which we like a lot is automotive, and especially in that also, I think bottom of the pyramid companies which are manufacturing and selling, trucks and tractors. So likes of Tata and Mahindra are our top ideas as far as automotive sector is concerned. We are also quite bullish on the larger financial services space. We believe that there is a lot more, there is a deep value sitting within the financial services space. And within that pack, the PSU banks and the small finance banks are two packs which we prefer over private banks and general NBFCs going forward. And I think the last bit is around the new energy themes. We believe that India is spending significantly on recycling. India is bringing the right policies to enhance our capabilities across solar, across other green energy themes. So, companies which are powering these sectors and these categories, whether in recycling, whether in solar, or whether in other new energies like green hydrogen, etc., have to be bought into. So there are multiple strong candidates which are within this pack as well. So again, these are the four major themes which we are looking at: consumption, automotive, banking, and the green energy.
Fair enough. I was also going through Systematix Diwali picks report. I think TCS is among your Diwali picks. What did you make of the earnings and the aggressive AI related push that the company has announced? Also, the fact that HCL Tech became the first company to really declare AI revenues. What are your thoughts across the entire IT universe? And do you see a significant upside on TCS going forward? Do you think much of the bad news, related to consumer discretionary spends, etc., and even the H1B issue, all these things are already in the price for some of these names?
Yeah, I think on the technology side, our view is that there is a lot of negative factors which are already built into the price. The second thing is that some of the larger names like the TCS, HCL Tech, etc., have been and have they work so closely with their customers on ground, whether in US, Europe, or other parts of the world, that they actually adjust to the need of the customers, whether it's on the AI front or any other digital transformation projects front, quite fast. While their base is quite large, and hence the impact of earnings on of these new initiatives for them will take some time to play. So from a medium term, we are positive about the companies like TCS more from a value perspective, while I think from a general EPS growth perspective, from a general earnings growth perspective, we believe that it will be better played. The sector will be better played through the small and mid cap names. But having said that, as I was mentioning earlier, we are more better placed at this point of time to play value, and at this point of time sits in companies like TCS. So that's why it's in our Diwali pick for the year.
Sure, got your point. Fair point. But what about these high growth names, especially from the quick commerce space? They've already seen quite a bit of a run up. Zomato hitting eternal, so to say, hitting fresh highs. Do you think that story, should not be looked at right now, given the fact that, as I was mentioning, it has already run up too much? And could there be more risks, with respect to cash burn going forward? Looking at the earnings as well from Zomato, what did you make, and how are you approaching the entire quick commerce play? High growth names, but would you say that valuation wise they are far too expensive, and right now is not the time to look at them?
No, not at all. We are, in fact, quite positive on the overall quick commerce space. We believe that the Indian consumer, whether for a 10-minute delivery or for a food delivery, and even now the entire restaurant sector is quite interdependent and on the quick commerce platforms. And definitely, company like Eternal is leading the way in most of these categories. So we believe, from a general consumer theme perspective, or from a general digital transformation perspective, or from a behavioral change perspective, these companies are going to be significant representatives of how the Indian consumer theme will play out. And these companies are adding new categories, have learned how to launch categories and do it profitably. So we are quite optimistic about a general quick commerce theme, and Eternal is of course the leader in the pack. We maybe because of the valuation which it trades at, we are not going overboard on it, but definitely from a long run, from a 2 to 3 year perspective, companies like these should be in our portfolio. After all, a couple of years back, nobody believed that this will be an index stock, and that's where we are right now.
That's true. Nobody really believed it would be an index stocks, and of course, the company also turned profitable. So yes, cash burn also kind of came down, but let's see how things really pan out on the competition front. But one more theme, and that has been the theme of Samvat 2081. That's been gold. It has outshone equities by leaps and bounds. Best yearly gains since 1979. How are you playing this theme? Are you exposing yourself to this theme via gold loan companies, via gold, the jewelry companies? How are you approaching it?
No, I think gold as a theme, gold and silver as a theme has has gained more prominence, and has of course has been the best asset class over the last 1 year, thanks to again the global
Hmm.
macroeconomics which has been at play. As far as companies within the gold loan business, etc., I think they have reported, despite the prices going up significantly, they are reporting steady numbers compared to the last year. So from a demand perspective, looks like the demand has maintained from a year-on-year perspective, and because the price has gone up, they are going to show overall revenue growth. But we are not really getting too excited by this gold theme being played through through some of these jewelry companies, etc. We believe it is better played through companies which are producers or miners of gold. And I think the best platform for us at this point of time has been to play silver, actually, has been Vedanta. So
Hmm.
Vedanta, through its subsidiary Hindustan Zinc, is a significant
Yeah.
producer of silver. And if one company which is actually going to show significant alpha on its earnings because of this run up
Hmm.
is going to be Vedanta. So that's our stock to play this theme, actually.
Hmm. All right, got your point. Last couple of questions then. What are the top three mid-cap ideas for Samvat 2082 from your report? Nikhil, I would like you to list them out for us.
Right. No, so within the themes which I spoke to you about, I think from a dairy sector, we really like this company called Dodla Dairy. We think in the private sector it is one of the finest names as far as reflecting on the bottom of the pyramid and middle class consumption theme. The company is present across Orissa, Andhra, and increasingly in parts of Maharashtra and MP, and is also a very strong play on in Africa markets as well. Very strong balance sheet. So Dodla Dairy is one of our top three ideas within the pack. From a
Hmm.
from a recycling space, we like this company called Pondi Oxide. Company is the third largest non-ferrous metal recycling company in the country, is set up a significant amount of capacity to enhance its capabilities of recycling products beyond lead into copper and many other non-ferrous metals. The company is also one of the strongest in terms of the technology they use for recycling, and we believe that the company will register close to about 60-70% earnings growth for the next 2-3 years. And the last business is in the banking space. And as I said, we really like the PSU Bank as a space, and within that, the Bank of Baroda, in our view, is a very strong play as far as value and earnings growth is concerned. The company is expected to report double-digit earnings growth, double-digit advances, and at the same time has one of the strongest balance sheet amongst all the large banks put together, whether it's private or public. So that will be our third idea amongst the top three ideas from our Diwali overall picks.
All right, the top three ideas coming in from Systematix Group. With that, Nikhil, would like to thank you for taking out time and joining in. Always a pleasure chatting with you, and I hope to interact, more often in the new Samvat. But till then, wishing you, your family, your entire team a very, very happy Diwali from the entire Money Control team as well. Have a great year ahead.
Thank you. Same. Wishing you the same. Thank you.
Thank you. Well, that was Nikhil Khandelwal of Systematix Group with his top, mid-cap recommendations and quite a few other names as well in terms of ideas for Samvat 2082. Looking at the market, we've cooled off slightly from the day's high. In fact, the Nifty has come off triple digits from the day's high, in almost 100 points down from where we were at the open. We are still holding on to the 25,800 mark. Nevertheless, it is still a triple digit gain on the index, a 100-point up move. The Sensex has also halved some of its opening gains. It was gaining 660 points at the start, but now it's up just about 330 points, so thereabouts 84,288 is where the Sensex is at. The Nifty Bank Index up 0.5% or so, 57,930 is where it's at. The advanced decline ratio even Stevens, but is firmly in favor of gainers. In terms of sectors then, last time I checked, all the sectors were trading in the green. That holds even now. I think most of the sectors are trading in the green, barring the metal and real estate pack. Those two indices are trading down with cuts of somewhere around 0.4% or thereabouts. But PSU Bank, 1.5% gain, that's the top sectoral mover. IT, after last week's underperformance, it has managed to stage some kind of a comeback. That index is up 1%. Pharma also doing well, 0.5% gains there. Banks, autos, FMCG are all in the green. But we are in the festive mode. The bulls continue to rally for a third straight day. So no reason to complain really. And tomorrow, of course, we have the Muhurat session. Going into that, hopefully we will end the day above that 25,800 mark. But yes, with that we are completely timed out on this edition of Opening Bell. To all our viewers from the entire Money Control team, have a great year ahead, a prosperous one. May you have health, wealth, prosperity, peace of mind, everything. But let's hope summer 2082 turns out to be a great year for equities. 2081 wasn't all that great in terms of what the headline indices really did, but remember, we are coming off 4 very, very solid years. So flat returns, but still no reason to really fret about. But hopefully 2082 will turn out to be much better, because we've already digested quite a few bad news and we've climbed all those walls of worry so far. So on a hopeful note, that Samvat 2082 promises good returns. We here at Money Control wishing you all the luck and prosperity for the new Samvat, and a very, very happy Diwali. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and I'll see you again later in the day. Thank you.